Hey, welcome back to my channel, LR Options. If you haven't subscribed yet, please consider subscribing, especially if you're new. Today's video is going to be for beginner analysis of certain stocks, and we're going to be reviewing BBBY, which is Bed Bath & Beyond, AMC, American Movie Theater, APA, Apache Group, NCLH, Norwegian Cruise Line Holdings. We're going to be looking for the trend, which way is the trend going in the stock market. We're going to be looking at candles that are near the simple moving averages. And we're going to use a simple moving average to tell us where it's best to enter our trade for maximum profit. We're going to be comparing the 30-minute time frame to the daily and the weekly time frame. Let's see. And we're going to be looking at candlestick patterns. Alright, so we're going to begin with BBBY. Let's bring it up on the chart. And that's Bed Bath & Beyond. And let's see, for this last week, the best places to have placed a trade, enter into a trade, a call trade, since the trend is going up, would have been over here on April the 27th. Actually, let's look at the 30-minute time frame, because I had it on the 15. I like the 30-minute time frame better. The trend on the 30-minute time frame is actually going up, down. It's going in different ways. If you look at the 9 simple moving average, it's going up, down, every few days. Let's look at April 17. And on April 17, the best place to put and enter into a put trade, that's a trade going down, would have been at April 17, 505, when the stock was at 505, and that would have been at 2 o'clock in the afternoon. And then you could have gotten out of that trade at 3:30 at 474. I know the stock is worth only 522 as of Friday the 27th, the 24th, I'm sorry. But I'm sure if you, with enough options purchased or shorted, you could have made enough of a profit. Another place to have placed another trade would have been at 473, April the 20th. And then get out of the trade on the same day at 2:30 at 445. Okay, and then when the train changed and started going up, simple moving average started moving up. The next best place to have placed a trade, and that would have been for a call trade, would have been on April the 22nd at around 457. When the stock was at 457, hold on to the trade and exit the trade on the next day at 504. And I know a lot of people don't like to do that, do not like to hold on to trades until the next day in case it's a gap that goes in the opposite direction, and then you lose. But that would have been a profit right there. Let me see. Let's look at this trade from a different. All right, let's go back to April the 4th, April the 6th, and the trade was actually, let me change this to an arrow. The trade was actually going up, And again, the best place to place a trade in a call or a put is when the stock is moves closest to the simple moving average. Now over here on April the 3rd, the perfect place would have been right here at 360, and then a good place to get out would have been 402 if you if you would have gotten out on the same day, or hold it to the next day and get out at 464. Okay, and for swing traders that like to hold on longer, even the next day would have been a better profit, or even a few more days. Over here we have a downtrend beginning March the 25th to April the 3rd, and a good place to have entered a trade would have been March the 26th at, let's see, 554, and exit the trade the same day at either 479 or the next day at 446, or actually a little bit lower than that. That would have been what, 432. Okay, or if you would have liked to hold on to that for a longer swing trade, you would have entered the trade at 551 and continued for a few days until you got down to either, let's see, 362 or 340, actually 352. Okay, that would have been a nice profit right there. Okay, so let's go to the next stock, AMC. Okay, American movie theater. And again, the trend let's look at March the 26th. Okay, that trend is going down. And I like to enter a trade under the 9 moving average, but it has to be when the 9 moving average is curving this way. Okay, when it's going around this way. And over here it's going around that way. Because that's when it's the safest bet that the stock is going to be going down. If you do it when it's curving this way, when it's curving up, your stock is going to be pulling up. It's going to be doing a pullback, and that's not good. So over here, let's say we would have entered a trade here. You see the stock would have moved down. Okay, over here you would have entered the trade here. The stock would have moved down. Again, you would have entered your trade here, and the stock moves down. Okay, and look how far it would have moved down if you stay within that curve, instead of that curve. Let's change time period. Let's change to the daily time frame. And each of these candles in the daily time frame represents a day. And again, you see how the curve is curving this way, all the way down. Okay, so that's showing us that for a few days, or actually weeks, this stock had been going down. So let's say that you would have liked to hold on to a stock for 2 weeks. So you see how the curve is right here. So let's say you trade here, and this is April 29, and let's say you would have wanted to hold it until Oh, this is of 2019, by the way. Let's say you would have wanted to hold it until May 29, the end of May. Okay, which would have been down here. Okay, so your trade would have been at 11:30, but it would have started at 1483. So 1483 to 11:30. See, where were we? Right here. Okay, that would have been a profit. Let's see what else. Let's again, in the daily time frame, the trend is going down. Trend is going down. And it went down from, let's see, September the 9th, no, September the 30th, 2019 to January 23rd of 2020. Now again, follow the curve, okay? Look at what happens. All right. The stock goes down. All right, so like if you get into the stock in here, this area, you're more likely to make a profit because you're right under the SMA, you're right under the simple moving average, and you're right inside that curve. Again, take a trade in here. Again, take a trade in here. All right. Okay, let's go to another stock, APA, Apache Corp, and let's say within that daily time frame. Over here you see that it's curved up, so let's trace that. So that it's safe to say you can take a call trade within the 9 simple moving average. Again, if you enter a trade here, okay, see how this trade just continued up. It went from 515 to 1022. Okay, let's go to another stock. Let's go to NCLH. Okay, again, look how it dropped in March. The beginning of started in February 20th to drop down to March 17th. And you see how the stock, it's close to the 9 MA. So it would have been safe to say if you wanted to take a trade over here for a put. And then you would have followed it down for a few, let's say, February 25 to March the 5th. It's about 2 weeks. Okay. That would have been 40.98 to 28.17. Wow. That would have been a huge profit. Okay, and look how it dropped over here. Okay, from 1912 all the way to 1486. And usually, remember what I had said earlier in another video, that if you have several large candles consecutively or close to each other, it usually means it's going to turn around. And it did. It did turn around for a little there. All right, let's go. Okay, so this is the end of this video. Thanks for visiting my channel here at LR Options. If you haven't subscribed yet, please consider doing so. See you next time. Bye-bye.